Good morning, everybody. It's 20th of January. I'm Joe Neighbour from Signal Centre. This is the live Talking Bull show that we do each morning. Normally joined by my colleague Steve, but he's enjoying some well-earned time off for now, so he'll be back in a week or so's time. In the meantime, I'll be running through the latest headlines and the chart setups that we follow across a few asset classes. So I'll dive straight in now. So in terms of the latest news in the UK, Unilever said it won't raise its £50 billion offer for GlaxoSmithKline's consumer products division, killing the prospects for a deal after the UK drug maker rejected its approaches. The decision to walk away comes after a plunge in Unilever's share price as investors questioned the rationale for the transaction that would have added brands such as Advil painkillers and Sensodyne toothpaste, plus a range of its food, personal healthcare and cleaning labels. So that's obviously more corporate side. In terms of what's going on in the wider world from a geopolitical position anyway, President Joe Biden said he thinks Vladimir Putin doesn't want a full-blown war, but will move in on Ukraine after amassing 100,000 troops on its border, part of an extraordinarily blunt assessment of Russia's intentions and the West's likely responses. The US with regards to their economy. The Treasury Secretary Janet Yellen said she is confident the Omicron variant of coronavirus won't derail the US economic recovery. She credited the high vaccination rates in the US and the emergency spending by cities and states made possible by the Biden administration. In terms of coronavirus from the European side of things, France yesterday, the number of infections topped 430,000 for the second day in a row, leading the government to extend a remote working mandate to contain the spread of the virus in the country. Elsewhere, Hong Kong plans to halt in-person secondary school classes starting from Monday as it works to contain twin COVID outbreaks caused by the Omicron and Delta variants. So clearly, more ongoing woes as a result of the pandemic being seen across various parts of the world. So let's get stuck into some charts. Going to start off with FX today. And going to start off with the dollar index. Not really much to talk about, to be honest. There wasn't an awful lot that we saw yesterday in the trading session to give us any kind of broader direction. This is the dollar index. This is yesterday's session, so we posted a bit of red, but overall it hasn't done much to sort of give back the gains that we've seen in the previous session. So overall pretty mixed and probably likely to expect more sideways choppy price action in the very short term. It's a similar situation on euro US dollar. Price seems to be moving higher within this kind of corrective channel at the moment. We saw a muted sort of bounce yesterday following the big selling that we saw on the 18th of January, just 2 days ago. I've drawn a blue line of support here at 113.14 on the daily chart. If that level breaks down, then we're probably simultaneously going to see a takeout of the low that we posted on the 18th and also this corrective channel. If that occurs, then I think we can expect to see lower prices in line with the dominant trend down towards our targets at 110.58. So expecting more mixed price action on that today. If we take a look at cable, following the retreat from the 50% Fibonacci level that we've talked about, this green line here at 137.05, we've also seen a break of this trend. Yesterday we saw some green, and today we're backing that up with some more strength, but I'm not sure it's enough really to reverse the course of this in the short term. Overall, it looks as though the trend is set to remain bearish following this sharp correction higher. If we can take out these levels that we've posted on the 14th and 13th of January, then we can maybe consider that something bigger is building, and we are actually in the process of continuing to correct higher on cable. But for now, it looks like the pressure will remain on the downside. If we take a look at euro sterling, obviously we spoke about this really impressive candle actually that was formed on the 18th of Jan. We saw a big move to the upside, but that was completely rejected, and we posted this engulfing candle or bearish outside day that formed on the 18th. Yesterday we posted a doji candle, and if you look at the formations today, it's a very similar setup. We are dead flat on the session as things stand at the moment. What we did post yesterday, as you can see by the wick of this candle, was a fresh low. It's the lowest price we've seen on euro sterling for 20 53 months. And we are expecting lower prices to be seen here down to this 82.75 level, which, if we scroll to the left hand side, is this key low that we posted back in December 2019. So lower prices are expected to be seen on euro sterling. If we take a look at Aussie US dollar, that retreated a bit to the upside yesterday following a couple of days of selling. Maybe even an engulfing candle yesterday, and that's being backed up by further gains today. So clearly a bit more appetite for risk, it would seem, today on this particular pair. That's pretty much it on the currency side of things. As I said, not much to go on. Let's flip over to cryptocurrencies. Yesterday we saw further weakness in Bitcoin, as you can see here by this red candle that we posted. A little bit of strength being offered today, 0.7%. But nothing sort of wholesale really, nothing that we can really get overly excited about. The grind lower looks like it's set to continue. Obviously, we've got these key lows here from the 21st of September and most recently from the 10th of January to consider. That's now at 39,542. That's the key area that I think that many market participants will be watching. Can that do yet another job as support? As it did so well back here, but not so much here. If that breaks, then we'll be looking for a move down to this 50% Fibonacci retracement level at 36,430. If that gives way, then we're opening up a move to the downside towards the 2021 lows that we saw around about 30,000 on Bitcoin, which did obviously a fantastic job as providing support for the price. So it looks like the pressure is set to remain on the downside there. Ethereum is outperforming Bitcoin today. It's up by 1.5%, but overall still looks like it is under a bit of pressure. We've seen 3 consecutive days of losses. We're trying to post some gains as it stands at the moment. Obviously, a long way to go between now and the close of the session on that. The support below at 2,928 is the key level. That's the key low that we posted here on the 10th of January. If that gets taken out, then we're looking for the next level down, which is at 2,651. Let's move on to commodities now. So oil is fresh off the back of making I think was it 9-year highs, 7-year highs. So we yesterday we made a bit of an attempt at overcoming that 86.39 level. Let's just scroll back to the left hand side. So this is a previous level from back here, which is back in 2013. So a considerable amount of time has passed there, 9 years since we were at that level. We did see a bit of a rejection. It's not, a huge one. It's not an engulfing or an outside day or anything like that. Just a bit of cooling off maybe. Things are pretty flat at the minute, up by 0.25% on WTI and pretty flat on Brent as things stand at the minute. Overall, the trend remains very positive, so there isn't any major concerns with that. We do have data out today, the latest read on the inventory numbers, which are due out at 4 p.m. UK time, so that may have a say on things later. Let's look at gold now. That hasn't been doing an awful lot up until recently, but yesterday we saw a nice breakout above 1830. So that is technically quite a nice sign that we've broken above that resistance, and maybe now we can start targeting a move up to the next level of resistance we have, which is around about 1877. So looking a bit more positive on gold following that break higher. So maybe we'll see a continuation higher on that. Silver was the one that led the way yesterday, though, if you recall. We saw a break above this resistance at 23.43, and we saw those gains backed up with further strength yesterday before eventually closing around where we are now, actually, 24.14. Posting a bit of a doji candle, so taking a bit of a pause for breath as things stand at the moment. But again, long way to go in the trading session, so anything could change. But clearly, momentum seems quite positive on the precious metals at the moment. So we'll have to wait and see whether or not there's any follow through on those. But technically, both look like they could be reasonable buys on any sort of pullback in the short term. Moving on to indices now. FTSE 100 stalled a bit yesterday and has done over the last couple of sessions. We've seen a bit of a choppy start, actually. We did post new highs there at 76.35. So that's the highest level we've seen on the FTSE since prior to when the pandemic really kicked off, which is a good sign. Obviously, this is being led higher by banks and mining stocks at the moment. We've also seen some of these gold stocks pitch in as well as a result of the move higher in gold yesterday. So not really much to report here. It is kind of looking maybe a bit overstretched in the short term, but a little bit of indecision at the moment on today's candle. Not really any clear indication as to what I do on this. We've got some resistance above at 76.78, which would be or signify a recovery to back above pre-pandemic levels, which would be, a nice milestone to achieve. But in terms of trying to target that level, there's a lot of fresh air down here as well. So from a risk reward perspective, it's a little bit imbalanced at the minute. So I don't think there's many opportunities to be considering on the FTSE 100 just at the moment. If we look at the DAX, that posted a long-legged doji yesterday. We saw quite a large range actually within the session, but didn't actually make any progress. And we looked as though we're shaping up for more of the same today. So overall, for me, it looks like we're going to continue to trade within a range on the DAX. And again, opportunities may be limited. We need to see maybe some more sort of catalysts on the risk side of things as to whether or not we're going to see any changes in the outlook for the indices. Yesterday was a really interesting day for the S&P 500 because it was really hanging around the lower end of this uptrend, and also more importantly this horizontal support at 45.80. Well, yesterday after the close we saw a clean break of that level, so we're now for me, looks as though we could see a bit of a correction take shape. Also, if we just sort of look at the price structure of this phase here, we can see that there's a bit of a rounding top that's been taking place over a number of months. Now, when tops form, they tend to be processes rather than events in markets where you see things just reverse sharply. So when you see these sort of rounding formations take shape, they tend to be more reliable, I think, from a technical perspective. So we may now be in the process of undergoing a deeper correction in the S&P 500. So we may be preparing ourselves here for lower prices. From a technical perspective, what we'd be looking for now is a retest of this resistance, which was previous support at 4580. If we see a nice retest into that level and the sellers then step back in to send prices lower, then we're getting a nice confirmation that from a technical perspective, things are looking pretty good. So that's one thing to look at. The other thing is the Nasdaq, and that's leading the way at the minute. That's already broken down through the trend support line and through the horizontal support at 15,500. No looking back on this. We made new lows yesterday. We took out that low that we posted here on the 10th of January. Posting a bit of green at the minute, but a long way to go in the trading session. Again, it looks as though it could be a case of trying to sell into strength here. We've got a measured move target from this range, so from the high here down to this low, assuming this is a range, and we've projected that lower. That comes in at 14,309. But below that, we've got some support here from previous levels at 14,066. So there is scope for lower prices on Nasdaq. It would seem at the minute as though tech is out of favor, and we could be seeing more money coming off the table in that space for now. So going to leave it there. Going to move on now to the gun to the head challenge that Steve and I participate in on a daily basis. We basically pick a market that we think will make some money on the session. And yesterday I went short of cable, which didn't work out. 26 tick lost, or 1R loss for me yesterday. So yeah, not great. So what am I going to do today? Well, I'm fancying lower prices on the equities, that's for sure, given what we're seeing on the setups. So let's have a look and see if there's anything that takes my fancy. So this is Nasdaq. We're talking about the takeout of this low from the 10th of January. Are we going to see lower prices? I think we are. So I'm going to back this one today. I'm going to go short of Nasdaq. I'm going to sell it now at 15,106. I'm going to put a stop above these highs that we posted in yesterday's session. So it's a pretty lumpy stop, if I'm honest, 300 points, which ideally I'd want something considerably smaller, but I'm just going to go for a 2-for-1. This isn't the typical way that I'd go about making my targets. Generally, I'd want to look at for actual levels to use rather than just arbitrary numbers, which I've picked here. So I'm going to go with this because I think that's where my bias is at the minute is for lower prices here on Nasdaq. So going to target a move down to 14,506. And going to have a stop loss at 15,404, a simple 2-to-1 risk reward set up on Nasdaq today. Okay, so data wise, throughout the rest of the session, we've got initial jobless claims from the US at 1:30 p.m. UK time. Claims expected to rise to 232,000. At 3 p.m. we've got the US existing home sales, which sales are expected to rise 0.4% month on month. At 4 p.m., we've got the US EIA crude inventory numbers. Stockpiles fell by 4.5 million barrels in the preceding week. And then at 11:30 p.m. UK time, we've got the Japanese CPI data, prices expected to rise 0.7% year on year. So interesting day ahead in terms of the data. We don't have much out from the US on the corporate side of things from the earnings, but clearly the US markets are under a bit of pressure at the moment, and we appear to be in sort of corrective mode. So do be careful if you are heavily exposed in that area, and obviously use risk management where you can. So that is it from me today. I'll be back tomorrow with some more. And until then, everybody trade safe and have a great day. Goodbye.